So you want to start a business, and you're like, I need money. Well, how are you gonna get that money? Well, there's a bunch of different ways, and we're gonna talk about some different small business financing options, right? Because you can get business financing by taking on debt, you know, small business loans from traditional banks, online, lenders, or offering investors equity. The right financing for your business is going to depend on a bunch of different stuff, like why you need funding, how fast you need it, and like qualifications, do you and your business have? And you got to find a good fit. So I kind of want to talk about some of these options and like where to get them and let you choose which one's going to be right for you. So the first one we're going to talk about today is going to be bank loans. Pretty normal, right? And this is going to be best for, kind of like a, you kind of bootstrapped yourself up, got yourself going, and, now you're like, okay, like, I want to turn this in from a side hustle to like a real business, right? You've already got some numbers to show, right? A little collateral, strong credit, right? And traditional banks are a great starting point and can help you figure out where you stand in terms of qualifying for financing. Types of small businesses, um, you know, the funding for them offered by banks, they're going to include term loans, business line of credit, equipment loans, and even like business credit cards. Bank loans typically have a low interest rate and competitive terms, but they can be hard to qualify for. You'll likely need, strong personal credit, established business revenue, you know, and then, even if your business doesn't have a strong enough track record or enough assets as collateral to qualify for a bank loan, talking to someone at a traditional bank can help you figure out what application documents you need and what your best options might be. Right? So, start by contacting a bank, with which you already have an existing relationship. If you don't have one, if you don't have a relationship with someone at a local bank, or maybe, they don't have small business funding, just search online for local banks in your community, right? And these institutions, right, are a great resource for small business financing because they offer a strong, interest in the economic development of the community. Community banks hold about 35-36% of small business loans. So, you know, they really want to see their community do better, right? So, you know, big names like Chase, Bank of America, Wells Fargo, they all offer, business funding options as well, right? So the next one we want to move on to is going to be SBA loans. Now, this is going to be best for businesses that don't meet the traditional bank's strict lending criteria, right? The, you know, the U.S. Small Business Administration offers lenders, mostly traditional banks, a federal guarantee on your loan. This makes it less risky for banks to lend you, funds that you need. Now, in guaranteeing the loans, the SBA also connects you with favorable rates offered by traditional lenders. There are multiple types of SBA loans available. There's SBA 7A, SBA 504, SBA microloans. The most popular of the SBA loans is the 7A, right? 7A loans can be used for a wide variety of funding purposes and are available in up to $5 million. Although SBA loans can be easier to access compared to bank loans, you still need to meet some criteria. A good credit score, right? Your credit score, FICO 690 and up, strong, revenue, and you got to meet these benchmarks. You're just not going to qualify. Plus, the application process isn't easy. You may find yourself trapped under a bunch of documents while you work through the appropriate forms. Most SBA loans are issued by banks, credit unions, and other financial institutions. Similar to bank loans, you can start your search for an SBA loan with a lender you've previously worked with or a local bank in your community. National banks like Chase, Wells Fargo, and Bank of America, they issue SBA loans as well. The SBA website, it also offers a lender match tool to help connect you with, financial institutions in your area. Then, of course, number 3 is going to be them online loans. And this is going to be mostly for people who probably don't have the best credit and you want fast funding or an easy application process. With traditional, banks limiting access to capital, online lenders have seen an increase in popularity, especially among owners struggling with not so good credit. Um, you know, especially, like 51% of medium or high risk credit applicants, they're going to apply to online lenders because they just can't get it from traditional, right? Online lenders, they also offer fast cash, right? And several of them able to turn around funding within 24 hours. Now, these lenders offer a variety of small business financing options, including term loans, lines of credit, and invoice financing. The cost of borrowing, however, it's usually going to be a bit higher. Some annual percentage rates reach close to 100%. Now, there are a variety of small business lenders out there that offer online loans. And the best option for your business will depend on the type of financing you need and what you can qualify for. As an example, if your business has strong qualifications but prefers an expedited process, credibility capital and funding circle, there's going to be good options for traditional term loans. But for a business that want a flexible line of credit, Blue Vine, On Deck, Fundbox, they're going to offer some good competitive products. Now, of course, there are small business grants, right? Now, this is like, you know, small business grants, they're going to offer a way for business owners to get established or grow without having to worry about paying back the funds. Typically offered through nonprofits, government agencies, and corporations, some grants focus on specific types of business owners or particular industries. Small business grants can be great for, funding a startup, as well as for businesses that can't qualify for traditional debt financing. The downside to free funding is that everybody wants it. It will take a lot of work to find and apply for grants, but time spent searching for free money opportunities, it might pay off in the long run. Federal and state agencies, as well as private corporations, all offer small business grants. Grants.gov is one of the most well-known online databases for grants distributed by government agencies. Your local economic development administration branch or small business development center, they might also be able to help you find grant programs and similar funding opportunities, right? Now, credit unions, right? Number 5, credit unions. These are for people who just kind of want more of a personal touch, basically. I mean, they're kind of like banks, and credit unions offer favorable rates and loans backed by the SBA. But unlike banks, credit unions have increased their small business funding. Right, between 2004 and 2020, the number of credit unions offering small business financing doubled. In addition to SBA loans, credit unions can offer a range of funding options, including lines of credit, traditional term loans, and business credit cards. You're likely going to have to be a member to qualify for financing, but the co-op nature of credit unions often ties them to the community. So you may also reap the benefits of more personal relationships and name recognition. Now, since credit unions are often community-based, you'll want to find a local option. There's a website called mycreditunion.gov, and you can browse credit unions in your area. Some credit unions, they're going to, offer membership based on your employer or organizations that you might be affiliated with. As an example, Navy, right? The Navy Federal Credit Union is a national credit union that offers membership to members of the U.S. Armed Forces, Department of Defense, National Guard, as well as their families. Now, Navy Federal members can apply for a variety of business loan types. So one of the last things I want to talk about is going to be crowdfunding. Right now, this is going to be for the people who have businesses with products that can capture, the public's interest, like a wide majority, right? Crowdfunding sites, Kickstarter, they rely on investors to help get an idea or business off the ground, often rewarding them with perks or equity in exchange for cash. Although the popularity of these services has increased in recent years, there's going to be some caveats. For one, your product or company has to be intriguing enough to catch the eye of a bunch of investors. In the case of equity crowdfunding, where investors gain a stake in the company, there are strict securities laws and rules to follow for investors and entrepreneurs alike. Crowdfunding can be worthwhile, for businesses just starting out, but it's not a great solution for long-term financing. Now, like I said, you can go to Kickstarter, GoFundMe, Indiegogo. These are going to be good choices for rewards-based crowdfunding. Now, for equity crowdfunding, there's places like Republic, Circle Up, and Fundable. These are going to be the best options for those. So, now that you've got the idea about your business, whether you're trying to start it or you need more funding, whether you need to expand, whatever it's going to be, you got a bunch of different options of where you can get a loan from or anything like that. So hopefully you enjoyed the video. If you did, smash that thumbs up button. If you're not subscribed to the channel, I'd appreciate if you did. But until I see you guys in the next video, y'all be safe.